Hey everyone. Fisker Automotive was expected to have a brilliant year in 2023. After all, this was when the company was going to start increasing production and start making deliveries to customers worldwide. That part has been true. The company did ramp up production and the company has delivered thousands of vehicles to customers eagerly awaiting their Fisker cars. Unfortunately, the year has been dismal for Fisker's stock price. It's down 80% year to date, and in the last month and a half, it's down mostly the big chunk of that 80%. So in this video, I'm going to look at Fisker's prospects, its revenue and profitability in the latest quarter where it did increase sales. And then I'm going to look at its valuation and the EV industry to answer if I think Fisker stock is a buy heading into 2024. So let's get right into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I mentioned already that Fisker stock has had an awful year, down 80% year to date. And you could see most of these losses have come since October, really since the company started production and started making deliveries is when the stock price faced the biggest challenges. I'm going to talk a little bit more about why that's been the case when I get a little bit further on in the video, but that's been the story here since the company really started making deliveries, a moment that was supposed to be a milestone to be celebrated for the company. It's been the opposite. The stock price has taken a big hit downward, so that's been unfortunate. Still, in the most recent quarter, Fisker's revenue jumped to 73 million as it really started making delivery, started making sales, and that's how the revenue jumped. You could see revenue was flat almost until it really started making production meaningfully and making deliveries. That was supposed to be a good time for the company. Looking at revenue going forward, Fisker is operating in a massive total addressable market. Total spending on electric vehicles reached $539 billion in 2022. That figure is estimated to reach $907 billion worldwide in 2028. Industry-wide, this spending is supported by trillions in government incentives to support the transition to cleaner energy consumption. Additionally, governments worldwide, to varying degrees, are mandating manufacturers to produce a larger percentage of electric vehicles. Importantly, investors should be aware that without these government incentives, the growth of the EV industry would not be nearly as robust. After all, governments have been known to change their mind, to extend deadlines, and remove mandates altogether. Still, within this backdrop of incentives in play, the companies that are likely to benefit from the expected growth are Tesla, Rivian, NIO, and Lucid Motors. It remains to be seen if legacy automakers like Ford, General Motors, and Stellantis will ultimately benefit from this transition. And so Fisker too is one of the companies that stands to benefit from the growth in the EV market. And I suspect that Fisker's revenue will continue to soar over the next year, absolutely soar as it increases production. Revenue is going to increase meaningfully, substantially. That's not going to be an issue for Fisker in 2024. That's not the risk for Fisker. Here is the risk for Fisker, is in delivering that revenue growth, delivering that sales growth, while also increasing the proximity to profitability. You can see the operating profit margin over the trailing 12 months did improve as Fisker started making deliveries, right? Because before this point, it was just incurring losses without making any sales. So it was just a bunch of losses on the bottom line. Now that it's making sales, it's still not going to be profitable immediately, but it's going to get closer and closer as it ramps up production to make up for all of its other expenses. That is one of the reasons why Fisker's stock is down so much since it started making deliveries. It turns out that the infrastructure was not in place to go from the production to delivering the cars to customers. And so Fisker said that it needed to hire significantly more people to facilitate the deliveries of cars to people. It also needed to purchase or lease more real estate so that it can have the cars available at those locations for people to come and pick them up. Now, what does that mean? More salespeople and more real estate means a lot more expense already for a company that's losing so much money on the bottom line. So that's what one reason that was disappointing to Fisker stock investors and why the stock price has fallen so much since it started making production and making deliveries. Also, the company has decreased the production outlook over and over and over again for 2023. First, it was talking about making 20, 40, 60,000 vehicle deliveries in 2023. And now that figure has come all the way down to just a little bit under 10,000 for the year. So, coupled all together is what has investors pessimistic about Fisker. And going into 2024, investors are hoping that the company can improve these prospects. Although for me, one big question mark is how much will the company increase production in the next quarter? And how much will it cost Fisker to make those deliveries, right? How much will it cost for the company to operate in the next quarter? Will it improve its operating profitability, or will it go in the negative direction after it increased all that spending on real estate and salespeople and delivery and all of that, right? That's a big question mark for me that I'm waiting to see in the next quarter. So cash flow from operations is a similar story, just going in the wrong direction, and it even worsened since the company started production because now there's inventory that it has to deal with. It's spending money on the inventory and it's not getting it to customers quickly enough, so that inventory is staying on Fisker's balance sheet instead of going to customers and getting the cash from customers. That's a difficulty that it must overcome as a new company, as one that's just now starting out. This is really highlighting how difficult it is to start a new car company, right? It's not an easy thing to do. It costs billions of dollars and years of development to get to this point, and you're still struggling and you're still trying to work out the kinks. It's not an easy thing to do. It's very risky, which is what I've been saying with many of these EV companies, Fisker included, that it's not an easy thing to do. Investors should realize that this isn't just, oh, it's an EV company. Governments are forcing everyone to have EVs and therefore EV company must win, right? It's not that easy. In fact, it's the furthest thing from the truth. Yes, the market, as I highlighted earlier in the video, is growing because of the government mandates, but that doesn't mean every single EV company is going to win. It's not going to be the case. There is going to be some that don't make it. And so investors need to realize that when they're looking at EV companies starting out trying to capture market share. So with all of those losses in cash and profitability, I wanted to check out the balance sheet. Fisker has $1.1 billion in total long-term debt and just $529 million in cash. That's a dangerous position to be in because it's losing so much money, $628 million in the trailing 12 months. Hopefully it improves the rate of these losses. I don't suspect that it will get much worse from here, maybe for 1 or 2 more quarters. But then I believe it will start to improve the rate of cash flow from operation loss. And so I think that this amount of cash, 500 million, is okay for now, but it's dangerously close. I think it's going to be okay as long as it doesn't keep going in the wrong direction. But it might need to go back to investors and ask for more money before it can get on a sustainable footing. But given the position it's in, I think it'll be okay. But it is a risky position. And so finally, I wanted to look at Fisker's valuation. It's trading at a forward price to sales of 0.238, which is relatively cheap comparing to other EV companies out there. However, that being said, Fisker is in one of the toughest positions of all of the EV companies out there. It's only recently starting production. It's burning through cash still at a dangerous rate. It's struggling to put in place the infrastructure to get the vehicles from production to customers. And so, for all those reasons, I think the stock price decrease was justified to some degree. And so, if I was to answer if Fisker stock is a buy for 2024, right now, given the precarious position it's in, I would say no, but with an asterisk. With an asterisk. I would say no, but if the company improves the infrastructure without spending too much money in the next quarter, and it's able to meaningfully ramp up production in the thousands of units for the quarter, I wouldn't be surprised if I change my recommendation for Fisker stock to begin the year. I wouldn't be surprised if my no recommendation here changes in the first 3 months if Fisker can show me that it can increase production, settle out the infrastructure issues, the logistical issues, and increase production by the thousands of units. And if the valuation is still where it is today and Fisker has done all of those things that I highlighted, I wouldn't be surprised if I upgrade the stock. And as you might already know, Fisker is a stock that I follow closely. I've made several videos on Fisker this year, and I've been following Fisker stock for a couple of years now. So that's my recommendation for now. I would say no, it's not a buy, but stay tuned and stay tuned for the rest of my videos in 2024 to see if that recommendation changes. I wouldn't be surprised if it does. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.